Hey there, happy Aloha Friday from your hat dude, wearing mortgage guy, Billy May, and Capital Partners President Craig Garcia. Aloha Friday, Craig.
Hello, Bill. How are you?
I'm doing well. Yeah, I'm still in the aloha mode because I came back from Hawaii last week and I'm still kind of on a Hawaii time. And I got my Aloha Friday shirt, my golf cap. Got a chance to golf when I was out there at the Navy Marine Golf
Well,
Course. It was
a
spectacular. So
at least you have a backdrop that's keeping you grounded in business. You got
I
the money
am.
there in the
Yeah, I
background.
know,
So,
right? Yeah, I mean,
yeah.
it's all about the money, right? I mean, so we're the money men, right? We're out we're out here. We're lending money, so we've got money to lend. So as a reminder, it's kind of a subconscious thing, I guess. We got to remind people that we're here to lend you money for the right price and for the right home.
There you go.
Yeah. So as always, we're going to talk about a few different topics. What we always talk about the mortgage rates, Freddie Mac weekly survey, and then we're going to talk about kind of not really a specialty product, but kind of a highlight of a product this afternoon, and talk kind of about the real estate market. And but let's kick it off with mortgage rates. The Freddie Mac survey came out and trended slightly upwards, right, Craig? And it's funny how the Federal Reserve met, and here we are. If, a little while later, and everybody thought, oh, rates going to go down, and here the market comes down, and the rates have kind of trended slightly upwards since last week.
Yep, it's happened many, many, many times. The Fed does one thing and mortgage rates do the opposite. Not terribly in this case, but we did get some decent news today. I mean, we had an inflation report that came out this morning that was right in line with expectations, the PCE report. So nothing damaging there, and still nothing um, too damaging in that way. I think that there's just the balancing act between what inflation and the jobs market, and
Right.
Powell kind of after coming out and being a little bit hawkish in terms of needing to see
Uh-huh.
some more data to lower rates further in the future. But I think the market still pretty much expects that that's happening. So
Yeah. Well, a couple days earlier this week, we had, I think it was the jobless claims report came out, and it was a little bit different than they thought. And,
yeah,
they kind of, the market kind of changed then. So it's amazing how it's kind of like a day to day thing. One report one day and you got another report the next day, and the story could change daily. But
yeah,
generally speaking, yes, rates have kind of trended slightly upwards. Still, I mean, the average rate they're saying is like, what, 6.3, so we're saying that 6.3, 6.5 range for A credit conventional loan borrowers. So we have
yeah.
to reminder of that. But we're still in that range. So you have some news for us as far as products are concerned, or maybe not really a specialty product, but some updates, right?
Yeah. So a couple things that came out this week. So Fannie and Freddie, the Federal Housing Finance Agency, the two big houses that kind of set the mortgage rules for everybody, and also the mortgage loan amounts. So the reason our mortgage business and the mortgage industry works so well for borrowers here is there's this standardized set of rules. So if you can fit into this standardized set of rules, you can very easily go to a lot of places and expect the same type of loans. And so and that limit before the size of the loan kicks you out, and now you're in a jumbo loan category where every bank might have a different down payment requirement, is 8065. Is what it is right now. Every year they'll look and they'll say, okay, based on home price appreciation, we should raise that, right? And so what happens is, knowing that that's going to happen, lenders every year around this time of year will come out and they'll say, "Hey, we're going to raise the loan amount that you can get and still have it be a conforming loan. We're going to start offering those higher loan amounts now. So instead of 8065, we've got several investors now that are saying, "Hey, we'll go to 819 on a regular conforming Fannie Mae Freddie Mac loan." And so to kind of put it in perspective, that means that you could buy an $862,000 property with just a 5% down payment. And so the minute you try to go and do a $870,000 property, you're going to have to put more than the 5% down,
Right.
to get it there. Because anytime, yeah, like I said before, jumbo loans usually require you to put more money down, and then that starts getting a little different. It's a big number.
It
Um,
is. Yeah. And if you go into multifamily property, like you were saying, I mean, if you want to buy a duplex, triplex, or even a quadruplex, live in part of it and rent out the other three, I mean, the loan amounts go up higher.
That's right. Most people don't realize that. So that number that I just gave you, that 819 now, is for a single family property. But yeah, for 2-unit property, it goes up. For a 3-unit property, it comes up, and then for 4-unit, it's like 1,555,000 and change.
That's
And
crazy.
I know. And so the other news that has come out is related to 4-unit properties, multi-unit properties. Freddie Mac basically said, "Hey, you're going to Freddie Mac, if you were trying to buy a 4-unit property." And you were going to live there in one of the units and rent out the other three, kind of what some people refer to these days as house hacking, then you had to put a 20% down payment to get that loan with Freddie Mac.
Right.
Fannie Mae was allowing for the past couple years, they've been allowing like as much as 95% financing on a case like that. So Freddie Mac has basically joined Fannie, and now they'll do a 95% loan to value loan on a 4-unit property, 4-unit property, and that ends up being like I said, a million 5.5. You could really buy, if you found a property like this and could qualify, 1,630,000 property, a 4-unit property, and put 5% down. Live in one side, rent out the other three.
Crazy.
It could
It's
happen.
not listen, it's not unheard of, especially, being down here in South Florida. We have all kinds of YouTube influencers, Instagram, people like that, they've got enough money for a down payment of something like that, maybe 100 grand, 150 grand to work with. And they want to get into a property like that. And they're looking at long term, generational wealth and real estate. And so it's not far fetched. I mean, it might sound kind of like unbelievable if somebody would actually do that, but I mean, it's out there. And actually, Fannie and Freddie, they look at it. Right, and they say, "Hey, this is doable." And then now you said something about the house hacking, so elaborate on that phrase.
So house hacking is kind of becomes something that's come up because listen, it's become harder and harder for people to afford to become homeowners.
Yeah, we all know that,
Homeownership,
right? Sure.
between prices going up, and over the past couple of years, rates had gone up, insurance costs had gone up, and there's a need for people to try to figure out a way to get into and buy and own a property, and
Right.
and and part of this has been going on for years, but the term seems to have come about more recently, where people will do things like, for example, buy a multi-unit property. Hey, buy instead of going out and finding a home or a condo and buying that to live there. Hey, I'm going to try to make an investment and a home purchase at the same time. So I'm going to buy something that specifically has another unit where I can live in one and rent out the other and help me pay for my housing expense.
No,
And so,
it's a very logical thought process, and unfortunately, in
yeah,
South Florida, as you and I know, we're both from here, both local boys, and yeah, there's not as many as those multifamily properties as we'd like to see.
right.
And the ones that are out there, they're usually in older neighborhoods, east side of town. Maybe they don't have impact windows or so forth. Um, so that's some of the challenges we've come. But I mean, in theory, that's a great idea.
Yeah,
But
and there are definitely places, and there's certainly tons of places in Dade County that have,
true,
little, what we would call in our world an accessory dwelling unit, which might not really be a 2-unit property. It might be really a single family house, but it's got this carved away piece that you can access it from the outside, and then maybe it's not a full living unit that way you could rent out with a real lease, but people
right.
Airbnb those things. You could do a lot of things like that. So I would say there's people have done a lot of creative things to help them offset their housing expense, especially in the world of Airbnb. You could
Oh,
rent out a room. You know what I
for
mean?
sure, yeah. I've
Yeah.
seen those homes. I'm familiar with what you're talking about in Miami down there a lot. And, as I alluded to when we first started the podcast, I just came back from Hawaii. I hadn't been there in 30 plus years. The Hawaii housing market is literally it's double the cost of South Florida because it's an island. Honolulu is very, very saturated. And I'm driving around, I'm looking at all these places, and the lots are like half the size of the lots here. And there's a lot of those units with the ADU where they've got especially in Hawaii, they have multi-generational living because of the culture there. There's a lot of
Sure.
Asian families there and so forth. So you got the grandparents living there, the parents and the son or the daughters and so forth. They pass down. But it really dawned on me that market has consistently grown over the years, just like, densely populated New York, just like densely populated California. And really in South Florida, for the people, the first time home buyers are kind of scared or nervous. Are going to try to time the market here for rates to come down or values to come down. It just leads me to believe, Craig, that's just really not going to happen, especially in the 954. I mean, Broward County. I mean, because you and I know, listen, 2 miles west of here, we got the Everglades, and 8 miles east, we got the beach, and there's really no room left to build, right?
Right. No, for sure. I mean, yeah, there's certainly, a lot of people are asking themselves, "Hey, should I buy? Should I look to buy now or should I wait until rates get better?" And, I think there's always you know, eh, if your situation allows you to be able to look at being a buyer now,
Yes.
it's probably a good thing to try to really take a look at that opportunity because, if you wait, I mean, the good news about right now, there's plenty of inventory. The
Yes.
buyers have negotiating power, right?
Yeah, yeah, and the
Um,
values have leveled off a little bit. They're it's normal
yeah,
annual appreciation now.
yeah. And then so you got and honestly, interest rates have been getting better since May. You know what I mean? And
Yeah, yeah,
so it's been improving. Now, if some people think, "Hey, well, I'm going to wait until Powell gets out of office and rates are going to come down a lot till then," there's no guarantee that
yeah,
this
yeah.
idea that, hey, if we cut short-term rates a whole lot now, that long-term rates are just going to come down because if the market because those long-term rates are set by all these people buying bonds, right?
Right,
Long-term bonds.
right,
And what cutting short-term rates really aggressively does is it opens the door for more inflation. And the thing that the long-term bond investor hates the most is inflation. And so that's why we've seen there are times where, you know, a rate cut, doesn't always lead to a short-term rate cut doesn't lead to long-term rates coming down.
so
Um,
true.
so yeah, so I would say, and right now with the negotiating power that people have, instead of waiting for the rate to come down, negotiate, some fees from the seller that you
Yeah,
can use to buy the rate down further now. And later, if you were wrong and hey, it would have made sense to wait and now rates came down a whole bunch, you refinance.
yeah, yeah,
You know,
yeah.
so
No,
yeah, yeah,
exactly. I mean,
yeah.
I have right now my older daughter looking to buy a home right now, and should they rent or buy a home? And I mean, with rent, rents are so expensive, and you hate to say it. I mean, if you're looking at $2,500 a month, that's $30,000 a year. You're just kind of throwing away. You really, especially if younger people. I mean, if they buy a home and they live there for a while, even if the market softens or whatnot, they're going to be there long term. It's a long term goal. It's a long term asset valuation. I mean, you're going to get appreciation long term. So but it really solidified me when I'm on vacation. Sometimes you're on vacation, you're kind of chill, you relax, you're thinking things. I'm
Yeah.
looking around the market out in Hawaii there, and I'm like, yeah, I mean, South Florida is such a hot destination, and there's never you can't wait. I just really can't. So
You almost can't afford to wait,
yeah,
and if you did wait and you're waiting and now suddenly rates come down a bunch, you're not going to be alone in the idea that, hey, now it's time to jump in and buy.
yeah,
Now, unfortunately, everybody else that has that same idea as you is going to be putting extra competition against you to buy the amount of properties that are available at that time. So you could,
right,
so that the rates coming down could actually lead to sellers gaining some power back in the negotiating process, and you may end up paying more for the house just because a lot more buyers come flooding into the market. So,
yeah.
so I think all things to think about. So.
That's a valid point. Just to kind of button up here, you said that so right now, if somebody wanted to buy a single family home with 5% down, they could get a loan amount of what you said, 819,000.
819, yes.
Wow,
Offered right now. They can get it. So,
wow,
yeah, yeah.
that's really really cool.
Yeah,
Great stuff. So, all right, Craig, sounds good. We'll wrap up our Aloha Friday unless you got something else you'd like to add.
I
Uh,
think we're good.
for our lasting message. Covered a lot of territory today, but all right, sounds good. I hope you like the new money wall, the new backdrops. We
I
are the
like it.
money guys, right? So we're the money people. We want to loan you money at a very, very competitive rate. So
There you go.
sounds
So,
good, Craig. You have a great weekend.
you too, and I guess we'll see you at
The closing table.
there you go.
All
All right.
right. Take
See
care.
ya.
Thanks.